Hello and welcome to another video update about a very, very popular stock. A lot of you have asked for an update. I wanted to take a look at the UnitedHealth Group chart. Not only that, from an Elliott wave point of view, yes, but we will also take a look at the financial metrics and talk a little bit about what the business does and how it kind of fits together, how it fits into this Elliott wave structure wave count. Preferred interpretation is that we are in a larger uptrend, an impulse to the upside, and this support area is relevant for a wave 4 correction, which likely started in 2024. The idea is currently that this wave 4 is not complete. It likely will turn into a larger A, B, C structure like this, with key support between $96.32 and $259.93. Why is it preferred that a wider wave 4 is unfolding? The reason is proportions. If we look at the wave 2, how long it took, and the wave 4 here, how long it took, it's way shorter proportions, This here nearly looks like just one leg of what we had here. Just, again, looking at the proportions. In addition to that, I mean, the 38.2 retracement is normally the ideal target for a fourth wave. We don't have to get there. But once we have a top in this B wave, which is a corrective rally in a wave 4 pullback, we can calculate targets for wave C. Not possible at this point. However, it is very much possible we won't go down to $150. Why? Because the wave 2 was sharp, and the wave 4, based on that, is likely a sideways consolidation pattern. It's likely going to be a sideways correction. That's the guideline of alternation, very relevant from an Elliott wave point of view, which means if wave 2 is sharp, wave 4 is often sideways. Now let's also take a look at the shorter time frame for UNH. Long term, though, the trend is clearly up. Looking at the shorter time frame, the idea is then that an A wave bottomed in August. That was around $236. And we're now in this ABC structure to the upside. So this is the B wave I just showed you. We've already reached standard retracements and resistances, but the idea is that this is not yet all of the wave B. What I would like to see is a broader A, B, C structure. And next we might see a B wave pullback. I don't think it started yet. It had the opportunity to start already, but wave A still seems to be extending. The idea is currently that the A wave itself is unfolding as an ABC structure. Hold on, just need to change the wave degree here. So we have an A, B, C in wave A. Next, we could get a B wave pullback. It's not very clear if that started yet, but once we have a break below the last swing low here, which formed around $332, I think we can view this as a B wave in the B wave. Basically, again, a corrective pullback in a larger B wave corrective rally, which could then take us higher towards $434, maybe even $512. And as I said, once we have a top in place in this B wave, we can calculate the targets for the C wave to the downside. So we currently see this as a corrective rally. And an opportunity, this B wave pullback might be an opportunity for those who are looking for an entry. Again, please be aware this is a B wave, so it's a corrective rally, difficult to trade, but medium term, I would expect higher prices for UNH. In the very short term, the potential now for a pullback is high, so it might be something for the watch list. Also, please remember that it's entirely possible that the entire wave 4 is already in. That is currently not preferred, and the 3-wave move up that we've seen from the August low also doesn't really confirm that. So the white scenario remains preferred. However, at the moment, even if the wave 4 already bottomed in blue, we cannot really confirm one of them. They are both kind of moving together. And also in the wave 4, what we would expect, if it bottomed, this would be a wave 1, wave 2, wave 3, wave 4, wave 5. Okay, so until we get the pullback after the B wave top, it's impossible to really say which one it is. Now, I promised that we'll also take a look at what the business actually does. So we'll go to our partner broker website, XTB, which is the X station, where you can also trade UnitedHealth if you're interested. So if you're wondering where to trade this stock, this is where you could do it. We have a partnership with XTB, and we're also working on a community portfolio, as I explained in the PayPal update last time, where we bought PayPal. So this is all happening here. If you're interested, maybe also to, start a new portfolio, if you're looking for a new broker, maybe consider XTB. It's commission free. They have more than 1.7 million customers. They won several tests. Yeah. So basically commission free trading, no costs, very, very convenient dashboard as well. And I mean, I used some others before, and here you have access to everything directly, right? I don't want to, call any names, but sometimes when you use brokers, you have to apply for this access and that access, and then you have to apply for this. And this here is all very, very convenient. Now, let's take a look at UNH, and let's take a look, first of all, what we see here on this platform, which is quite handy. We see how the dividends are paid. So dividend pay date was in September, and they paid dividends, as you can see, 4 times a year. The next time will be in December. So I'd say dividends, you don't buy this title or this stock for dividends, but it's always a nice bonus if they pay dividends, if they are profitable. And the chart is also long-term bullish, which it is. Okay, so it's quite an interesting one. Now let's also take a look at some financial metrics. Let's talk a little bit about the fundamental side of UnitedHealth, because when we talk about Elliott wave structures, especially corrective B waves like this one, it's always interesting to see whether the underlying fundamentals support or contradict the technical picture. It's just a different lens, and I'm a huge fan of taking a look at markets from a holistic point of view. Now, from a trading point of view, Elliott wave is absolutely enough. From an investment point of view, if I really invest in a stock, I want to know what's going on in the background. So first of all, for those of you who don't even know UnitedHealth, they are the largest health insurance and healthcare services provider in the US. So it's basically a giant that combines traditional insurance with medical data technology and health management. The company operates under 2 main divisions. There's United Healthcare, which handles the traditional health insurance side, and then Optum, which focuses on more the data analytics and health services side. So essentially, it's not just an insurance company, it's a hybrid between healthcare, finance, and technology. Now let's take a look at some key financial data. The first one that I normally check is the earnings per share, which is EPS. You see it up here, 23.25, which shows that the company is highly profitable on a per share basis. This is quite high. And this kind of stability, though, in earnings is typical for the healthcare sector, because health insurance tends to be less cyclical. So people need coverage in all markets environments. Now, what else do we have? We have return on equity, ROE, which is also important, 23%. And ROIC is also an important metric, 14.6%. Both are very strong, showing that UnitedHealth is excellent, really, at converting its capital into profits. In simple terms, for every dollar of shareholder capital, the company generates around 23 cents in return. That's high efficiency. It's actually exceptional, especially for such a large business operating in a highly regulated sector. Now, the operating margin is 7.27%, which might sound modest at first, but it's actually very solid for a health insurer. It's always important to understand these metrics and the data in light of the sector. Now, margins in this industry are naturally lower due to heavy regulation, competition, but UnitedHealth compensates with massive scale and steady cash flow. Then we've got the debt to equity ratio, which I normally check as well, and total debt to assets. So we've got 0.78 and 0.84 here. This is a bit higher than what we've seen with more asset-light companies, but it's still perfectly manageable for UnitedHealth's cash generation power. Healthcare insurers typically maintain some leverage to fund operations efficiently, and I'd say this is within normal range. Now the PE ratio. The PE ratio is down here. Valuation is 15.4. It's quite attractive for a company of this size and quality. The market values UnitedHealth reasonably. Not cheap, not cheap like a deep value stock, but definitely not expensive compared to its long-term stability and growth. Yeah. Now, dividend yield is 2.4%, which might not sound huge, but the company, as I said, has a long track record of consistent dividend increases. You can actually see that. We just go back a few years. It's just always increased. And it's a very reliable dividend, payer. So that's something that some of you might be interested in. Now, sales per employee, that's the last thing I want to take a look here at. Over $1 million, which shows how efficiently UnitedHealth operates. Yeah, it's a mix of technology, automation, and then the scale of its network. Now, how do these fundamentals fit into the bigger picture? Now, from a macro and structural perspective, this company represents the defensive side of the US market. Yeah, it's a company that tends to perform well even in periods of uncertainty, because the healthcare sector has consistent demand, and with UnitedHealth mix of insurance and also their services, I mean, this company, in my view, is built for long-term stability rather than short-term volatility. I mean, you see that here, beta, which is a volatility metric, it's 0.18. So it's super low. Yeah, super low. So, I mean, while the Elliott wave count suggests we're in a larger corrective B wave rally, let's go back to the larger chart. Here, where are we? Larger time frame chart. There you go. So while Elliott wave suggests we're in a larger corrective B wave rally, the fundamentals show a company that's resilient, profitable, and stable. Something a B wave wouldn't normally suggest. B waves are quite fragile. However, again, what does this pattern mean? It means we're in a bullish phase, right? We're in a bullish market. This is simply a cool down, and this B wave could even technically overshoot. So I think it works out quite well. Now, this can explain why the B wave might actually extend further, because the valuation is quite low. As I said, it's not undervalued, but it's fair value. But and when fundamentals remain strong, investors often step back in before a final correction plays out. So it's not a company that collapses fundamentally. Yeah, it's also not a chart that collapses from a technical point of view. Yeah, we're holding all support levels. So, corrections are then rather like opportunities, to maybe look for positions based on the data. And for me, this is a financially sound, defensive, and well-diversified healthcare leader. It's profitable, pays a steady dividend, and operates in a sector that keeps cash flow stable, even in weaker market phases. So, from a fundamental point of view, this is the kind of company that can sustain a corrective B wave longer than expected, I think. Yeah, because there's no real weakness in the underlying business. So while we track Elliott wave here on the chart, it's good to remember that the fundamentals remain rock solid underneath. I hope that helped. Hope it added some value. If you're also interested in maybe, looking for a broker, start a portfolio, as I said, we have started a community portfolio here, then maybe consider XTB. You'll find the link in the comment section. Also with that, you might qualify for a free stock, depending on where you're located. You can read through it if you click on the link. And also, they are worldwide accessible, and you would also support our research project here on the channel. Thanks so much. Bye-bye.